If you're 55 or older and you haven't filed your 2025 taxes yet, stop. A new law passed late last year, the 2025 Budget Reconciliation Act, and it just changed the rules for the returns we are filing right now. You see, most retirees have no idea these exist, but if you miss them, you could be handing the IRS $5,000 to $10,000 that belongs rightfully in your pocket. I'm talking about a massive $40,000 SALT cap, a new $6,000 senior bonus, and a car interest write-off that sounds almost too good to be true. Let's dive into the biggest one first, the homeowner's relief. For years, the SALT cap, state and local taxes, was frozen at $10,000. If you live in a high-tax state like New Jersey, New York, California, Illinois, you know that the $10,000 cap was a massive headache. Well, for your 2025 filing, that cap has been quadrupled to over $40,000. But here's the question you need to ask yourself. Since the new law just quadrupled the SALT limit, have you calculated exactly how much money you're losing by continuing to take the standard deduction simply out of habit? This is the year to itemize again. If your property and state income taxes add up to $25,000 or more, you can now deduct every penny. Now, if you're a high earner, pay attention to the phase out. This $40,000 cap stays in effect until your income hits a little bit over $500,000. If you earn more than that, the deduction does start to shrink. But even if you're a high earner, the deduction will never drop below that $10,000 floor. Move number two? Move number two is a bonus for those 65 and older. In addition to the standard deduction, you can now get an extra $6,000 to lower your taxable income per person. If you and your spouse are both over 65, that's a $12,000 gift from the IRS. So here's a planning question for you. If your income is near the phase-out limit, do you have a plan to throttle your income to avoid losing the full $6,000 benefit? Remember, to get the full $6,000 per person, your income must be under $75,000 if you're single or above $150,000 if you're a couple. So, if you're sitting at, say, $151,000 in income, one small move like making a deductible HSA contribution could unlock the full $12,000 break for you. The third move is a brand new one. It's a permission slip to finally go buy that new car you've wanted. Now you can deduct up to $10,000 in loan interest on a new vehicle purchase. The requirement on this one is fairly simple. It must be a new personal vehicle, and it must have had final assembly right here in the United States. I know what you're thinking. Tim, is a tax break a really good reason to go out and buy a new car? Let me tell you about a couple I work with. Been driving the same old 20-year-old sedan they bought back when their kids were in middle school. It was reliable, but it was old. No backup camera, no modern safety features. They certainly had the money in the bank to replace it, but they just felt guilty about spending their retirement savings on a new car. They thought it was extravagant. But when I showed them that the financing interest on the safe American-made vehicle is now a major write-off under the new law, that guilt disappeared. It gave them financial permission to prioritize their safety. It wasn't just about a tax break, it was about the quality of life the tax break unlocked for them. Keep in mind, this deduction starts to disappear when you earn over $100,000 if you file singly or $200,000 if you file as a couple. Folks, these three moves are just the tip of the iceberg. The 2025 Budget Act changed everything from educational savings to how we handle our estates. Are you treating your HSA as a health plan to pay current bills, or are you maximizing it as a triple tax advantaged retirement fund? Because the law is so complex, I'm sharing you the exact master planning guide I use with my private clients to navigate the Act's complexities. This guide covers every major change under the new law, including permanent increase to the estate tax exemption. With the estate tax exemption now permanent, is your current plan optimized to protect your heirs, or are you still using the same estate plan from 5 years ago? The link to download the master planning guide is in the description. If you checked yes to more than 2 boxes, it means your old plan is officially outdated. I'm Tim Gardner. Don't file your 2025 return until you've checked these boxes, and I'll see you in the next video.